And Nigeria plans to borrow as much as 5 trillion naira to partly fund its 6.2 trillion naira budget deficit for the 2022 budget. Will the government's borrowing trigger a spike in interest rates? Steve Osho, the co-managing partner at Commercial Partners, joins us now to discuss that story. Thank you so much, Steve, for your time. So, your take on this spiraling budget deficit. Someone was making a point that 5 years ago, that budget deficit figure is more than the entire budget for the country. So, with these dynamics, how do you see this impacting interest rates moving into next year?
Thank you, Wale. Pleasure to be here this afternoon. I think one critical thing which we can look at is to play down what happened last year when we had the large amounts of borrowing that came through, large amount of deficit that came through funding from the interbank market or capital market through issuance of bond. If you notice or if you can remember, yield on government papers on the longest end, 30 to 20 years, were as low as 6% to 7%. And we had the 1 year paper to be trading around as low as 2% as at that time. And as done on the market, that's going to be some sort of borrowing going forward. You could see how the yield actually widened at the beginning of this year. Roughly about 500 basis points above the level they were trading last year. And that, just summarize the story around the government borrowing that we've seen so far. If you look at the number from the beginning of the year till now, compared to what we had in 2020, roughly about 3.3 trillion has actually been borrowed from the local market compared to 2.3 trillion done about the same time last year. And the number I'm actually running out here is different from the figure we had from the capital market, from the international capital market borrowing, because if you remember recently, we just raised another $4 billion from the international capital market, where we went to have a blanket raise of about $6 billion. So if we had that number to what we have, generally, we're talking about over 4 trillion has been raised so far. So if you look at that and look at the budget for 2022, in terms of the number that's been touted that'll be borrowed or have to fund the deficit, which is about 6 trillion. I think what will happen is probably we'll see a wider yield going 2022. When I say wider yield, I mean increase in yield, because if you look at how the yields are actually trading now, I go up above all the government papers. We have the 20 to 30 year paper trading around 13%. The lower bound of 13%, and you have the 1 year paper trading around 7.25 thereabout. I think going to 2022, if you're looking about 6 trillion to be borrowed from the market, I think one thing or one directional play would be how much of liquidity we expect in that market going to next year, and how that will impact into yield going forward. I don't know how much of that mix would be in terms of how much we want to go into international capital market to borrow, compared to how much they want to borrow from the local space. But if you look at the budget numbers, you could see that bulk of the money will have to come from the capital market borrowing, because just small amounts will probably come from the proceeds of sales of privatizations and maybe some drawdown on loans, which have been secured before now. Right. So generally speaking, I think we're going to see slight increase in yield going into 2022.
You mentioned slight increase, but I wonder if you factored the possibility that we could see a rate hike that is linked directly to the central bank's efforts to lure foreign investors back into the market. And speaking specifically around that, so if we get further tweaks around the foreign exchange policy of the central bank, do you think that higher yields is still something that foreign investors will demand before they begin to bring their dollars here?
So to answer that question, well, if you look at where inflation is trading right now, the last figure we got was above 16%, trending down from the high of 17% we got in a few months down the line. So, and you are talking about a 30 to 20 year government papers trading around 30%, which just tells you so much about, negative real returns on investment. And if you look at that compared to some other jurisdictions around the emerging markets, or some other countries in the emerging market, which have elevated yield compared to what we have in Nigeria. You notice that, or you will agree with me that most of those funds coming from the FPI will probably go to some of those markets. So if you look at that compared to what, sorry, if you look at that, in line with what CBN policies will be around the FX, I think right now, the current situation we have in interbank market still revolves around the 410, 420 upper band limit for interbank exchange rate. But most market players still believe that the Naira is actually not fair value at this point. We expect some slight adjustment to go into 2022, although from the budget that has been released for 2022, I think it's been pegged around 410. If we are probably going to see a slight slippage beyond that level in 2022, would determine how much of interest you are going to see from the offshore players.
Right.
And considering where with the yield are trading now, so it's a combination of both reasons, of both reasons that I gave earlier. If the interest rate actually expand next year, which means that based on the amount of borrowing that's going to come from the federal government, we'll probably see some offshore investment or FPI coming into 2022. And that will probably hinge on the possibility of how we address the Forex or FX issues in 2022 as well.